Holy macaroni. Today was a wild day. Closed just at about all-time highs in the S&P 500. In today's video, we're going to get a little bit more granular. It's going to be a shorter video. I want to walk you through what I expect going up into these next couple trading days. Let's get into it. All right, everybody, welcome back. We're going to first start off here looking at the 11 sectors, see how we performed. Yes, the FOMC announcement came out. I'm not going to sit here and drag on about the narratives of what I think, what and how to interpret it, all this stuff. I'm just looking at what the market did. I'm looking at price action. I'm looking at various signals, and then we're going to kind of go from there. What happened today in the 11 sectors? Tech was the leader, up 2.65%. We talked in detail about that on yesterday's video, so you can always go back and watch that as to why I thought tech could rally from where it was, mainly in very quick form. There was a lot of stocks that were moving into areas of support and getting a little bit overextended. However, the next two right there is healthcare and utility. So still some defensive posturing up there to be very mindful of, which really kind of brings up the question, hey, is this just a quick little hit to the upside, maybe, a start of a bear market rally, or, how bear markets, when they start, you can get very aggressive rallies to the upside. Well, we're going to be looking into some volatility and things like that of what to consider. Down here at the bottom of the list, financials, energy, and materials. Everything was basically in the green other than energy today. And if you take a look at the left-hand side of the screen, you have all the indices over here. Dow up 1%, S&P up 1.63. Obviously, the NASDAQ and the NASDAQ 100 performed exceptionally well because, well, the big tech, they rallied. We're going to get into that more. Now, if we take a look at the S&P 500 chart, that is one very bullish-looking candle. This came all after the FOMC announcement. Okay, I don't know how they did it, but they did it. They made it as positive as they could when it came to tapering. Now, where did we close? Well, we closed right at about all these all-time highs. Now, I want to go over a few things here. First off, from a price action perspective, large moves like that, large authoritative candles are obviously very bullish, but typically they can act as rubber bands, right? They can stretch out and then they can also snap back. And it's very, very frequent that when we get a day like this, you can get an inside trading day, the very following day. And it's basically showing that, hey, if you get a trend day to the upside, the next day may be a range day, which means it just kind of goes back and forth or kind of doodles around. We're going to go over that in a little bit more detail here. Let's keep going on. Let's look at the volatility index. The volatility today got crushed down to the downside. I want to point out that it is moving into that overextended to the downside territory, which means that, hey, we might actually still see some more volatility and actually get a bounce here. We still have one gap beneath us that hasn't quite filled, and that lines up with this previous low here. So that could act as support, shooting us right back up a little bit in terms of volatility. We still have these two gaps above us, and a lot of the times these gaps get filled. We even have one higher up that I've shared on Twitter that's more up like 45, I think it is. So we'll continue to monitor that, but this gap got filled today. That's why I highlighted in white, and this one shrunk, almost got fully filled there. Okay, let's continue on to the 15-minute chart. The 15-minute chart, okay, why am I saying that, hey, we might get a range day or might get, a little bit of a back off? Well, I mean, these aren't the type of moves that you really want to just chase right up, especially when they start getting overextended. I'm looking at the futures market. It looks like we might have a gap up. Be careful, because if we get gapped up, that's going to bring us a little bit more overextended territory after already a strong run up. So you might see some profit taking right out of the gate, which we might see it potentially pull back if that's actually the case. We are back above that 5-day moving average. It did hold as resistance throughout the day. As soon as that gave way, we fired off, and it looked quite well. I was actually showing out on Twitter a couple of charts on the ES, so E-mini. And basically what I was showing was just this, when the announcement came into play. I was showing on a 5-minute chart, but I'll show you right here. When the announcement came into play, we saw this kind of pull back and then all of a sudden rally up. And I said, basically, just don't chase this right now. Let it digest. Well, I was looking at the fib extensions. It did a 50% pullback. And then I measured, hey, if it cracks that top, we can move obviously higher to a full extended move and potentially even reach that volume shelf profile. If you can go look at the post on Twitter, but we definitely tagged that today, which brought the S&P 500 to 4,700. So yeah, it's a very strong move to the upside. Now, this is where it gets very interesting. We still have a lot of volatility that the market is pricing in. $52 quote unquote expected move here in just the next 2 trading days. So volatility has not really subsided that much. So you can still expect pretty large moves. Now, when we look at the S&P 500 here on the daily chart, I plotted out the expected move. So it's basically 47.60 and then 46.60-ish right there. So we can potentially move up more, which is basically right here at this, create a new all-time high, or we might move down and actually test right there the high of this previous trading day candle. That's more than possible to come down and then just kind of doodle around here if we start backing off a little bit. And we'll talk more about these big tech and where they land. But, nothing's off the table. It's also possible that we get a gap up, rallied up, and then maybe doodle around or come back down, okay? So, it's a very difficult trading environment, especially given after a very strong trading day and just how quick it obviously, one, happened, and then two, how much volatility is still kind of just being displayed out there in the options market. Now, this is where it gets interesting of what I might kind of expect to see. So let's take a look at yields really quick. So yields up slightly on the day. Typically when you get shot ups in yields, that's not that great for tech, but we did see tech move relatively high. If you take a look at the 10-2, it's relatively flat still. And then if you take a look at the 30 and 5, relatively flat on the day as well. So if yields start to rise, which is a possibility, that might put pressure obviously on tech, and that could lead a hand into the financials and or energy sector. Okay, so let's take a look at the TNX, the 10-year yield. It is forming somewhat of a falling wedge here. We had somewhat of a green day, right? Up 1.74%. This is the TNX, which is the 10-year Treasury yield. So if this fires off on us, flies off my screen. If this fires off on us, that actually might show us that tech might actually be a little bit of a laggard going into tomorrow, maybe Friday. Not obviously guaranteed, but what we would have to look at, well, if it starts getting below this little pivot right here, which is just above 1.4 or 14.0 on the TNX, yeah, then maybe it just comes down a little bit lower, and that actually helps tech rally, right? Volatility goes both ways. It's plus or minus. I said that in last night's video. But if it starts breaking out or even giving above this 1.5, and starts firing off, that could tell us like, hey, focus a little bit more on financials at this particular point in time, because tech might have to cool down after a strong move like this. And if you take a look at financials, it's butting up right against this area of resistance, this downtrend, and it's relatively unchanged for the week, but it did put in a nice hammer candle right here on today's trading session, and it's holding that 100-day moving average. You can see that the bulls made progress, okay? It put in a low and then put in a higher low. It's still putting in lower lows here, but you can see it's coiling up tighter and tighter right here, which means to me that a breakout or a break of this is going to be imminent. And whether that's to the downside to crack below 38.50 or crack to the upside is yet to be determined, but you can create trades around that. There are a couple of, like, for example, I showed on my Discord today, I posted a trade idea. It's ticker symbol. I'll just share it with you. I'm sure they'll be okay with it. Ticker symbol JXN. That is a financial stock. Let me actually see if I can actually just bring it up right now for you. Yeah, let me see. I'll just bring it up. But basically, it's forming just a nice bullish rectangle. I looked at a couple financial stocks. This one, to me, kind of had my eyes the most. Let me just bring it up right now. There we go. Bam. You can see JXN, it had this kind of pullback into this flagging pattern, into this 20-day moving average. It broke out on good volume. It's been consolidating inside, and we saw a little bit more volume come in today. So if it starts breaking out of those levels, and I'm right about, potentially yields going up and financials, a little bit of a rotation there, we could see stocks like this really start to pop. All right, enough of that. Let's go ahead and move on to XLE. XLE also put in a nice hammer candle, and typically these move hand in hand, financials and energy. Not all the time, but they are pretty consistent. This is still in a trading range, and it tagged the lower bound of the trading range, which happens to be a previous area of support here and previous area of support here. So it's likely that we can potentially get a bounce right into the middle of the range or around 57, or even come retest that top. Obviously, that'd be a huge move in just 2 trading days, but a hammer candle suggests that there is still some demand right there at about 54. Now, if we start breaking down from that, let's look at that 200-day moving average as that next level. All right, now let's get into why I think that tech might need to cool down a little bit. Not guaranteed, but today green across the board in the NASDAQ 100 if we take a look at the heat map. Here's a couple indicators here, okay? So we're looking at the NASDAQ new highs. NASDAQ new highs, even after a day like that, we're still seeing, you know, NASDAQ new highs relatively just kind of deteriorating, to say the least. And then if you take a look at NASDAQ new lows, this is where it gets a little interesting. NASDAQ new lows, even on a day like this, that's crazy. Bam, a huge move up. So we're talking more lows that were created in the NASDAQ there composite, almost reaching to this previous move right over here. And that actually showed where we saw a move to the downside. So very, very interesting, to say the least. Now, another one thing that I want to look at, this is very short term right here, but the NIA, this is NYSE advanced decline line. The very end of the day, yes, we had that rally up here, looking at the SPY on the 1 minute chart. Like I said, very short term, but you just want to pay attention to this peak, this lower peak on the NIAD. So it shows deteriorating internals, but meanwhile on the SPY, we hit a high and a higher high right here, showing that the price action moved higher, but the internals were deteriorating. Okay, so that's not always a great sign going into close, but, you know, like I said, it's short term. Calm down, right? I know it's an exciting day for all the bulls right now. You know, we talked about this on yesterday's video. I thought just by Friday we can reach to all-time highs again, and, you know, in a single day we got there. That was a very fast move. Are we going to hold it? You know, that's hard to say, right? Well, I'd like to present, once again, bearish and bullish cases. So you got to come to your conclusion, you know, look at the risk that I'm presenting on the bull side, look at the risk on the bear side. Let's take a look at the Qs. If on the daily time frame, you can see, you know, some good volume these last couple of days. That 50-day obviously held, and we bounced right back up into this previous range that we were kind of tracking. Okay, so yeah, very strong day overall, but this is where it gets interesting, okay? The big dogs, the mega cap, that's what we need to pay attention to. I'm gonna show you them on the 15-minute time frame, just to give you an idea. You know, if you're unaware of this, a typical person might just go in and be like, oh, they're going up, I'm just gonna buy right here. But if you take a look on just the shorter term time frame, just here, I'm gonna look through all the Fangman stocks, okay? Facebook or Meta, overextended to the upside here on the RSI as butting into a previous area of resistance right here. Doesn't mean that it can't continue to go higher. That's not what I'm saying, right? Overextended can stay overextended for a very long time. But just note, the move that got to this overextended was a very extensive rally, and you're going to see that throughout these charts. I'm going to continue moving on a little bit quicker now. Apple, overextended to the upside right here too as well. Very aggressive move. If we take a look at oops, I'm just going to stop using that marker for a second. NVIDIA was one we called out yesterday that we said that if it actually breaks to the upside, start looking to tag that 300 range, and it got the 304 to 305 today. But look at the reading on that RSI, got back above that 5-day moving average. So yeah, very strong move. That's positive to see, but it's getting a little frothy right there. Google, same thing, very strong move out of the gate. Could be potentially, you know, a double bottom here, and it just broke that. So yeah, even if we come back down to 28.90, that could be a very good setup there too as well to continue higher. But just pay attention to where price action is on a very aggressive move, okay? I don't like running into FOMO. Same with Microsoft. Microsoft, next one on the list, overextended to the upside, big move. This could potentially be a double bottom here as it cracked through that 330, started moving higher, and we tagged that 5-day moving average, so we're back right in that range. And we do have a gap right above us, 338 to 339. So, you know, if the market wants to gap us up tomorrow, we might gap right into this area for Microsoft. Then we might see it pull back a little bit, reset these overextension territories, right? This is why I'm showing you, because it could become a range day tomorrow, because the price advanced today very aggressively on obviously some stocks that were getting beaten down and very oversold. Okay, so, you know, is it time to celebrate? I don't know quite yet. Okay, I'm very, you know, right now it's just a very hard thing to determine. Apple, another one. Okay, overextended to the upside, potentially a small little divergence there, right? A little high to a lower high, and then we had a high and a higher high right there, and also potential double bottom right there as it tapped 2 times right there at around 172, and then cracked that 175 and started heading higher. So 182 is in reach definitely for Apple, and this has been a relatively strong performer to the SPY too as well, based out of all the FANG stocks. And then I want to show one more chart here. Actually, I think I do. Yeah, Netflix is the last one, also overextended to the upside here as well. The 5-day moving average on this one has been in a decline, and, you know, we're pulling right back into that 5-day moving average into overextended territory. So yeah, obviously what I'm trying to get to is if, these start to back off. We start to see yields rise. That can kind of, go hand in hand, right? Yields go up. These back off from these overextended territories. Very similar to what we saw overextended to the downside. Then we might get that rotation into potentially financials, potentially energy, where you kind of see that. And then, there's a lot going on right now, but I'm just trying to, give you all my thoughts. Let's hop into crypto. Sailor to shift ratio. Still continuing to turn up, put in a nice little hammer candle right now on the weekly time frame. We're not out of the woods yet, but it's still looking good, right? It's looking better, and that's always positive. If we take a look at the absolute performance of Bitcoin on the daily time frame, all right, where are we? Well, we have that falling wedge. Why do I say we're not out of the woods yet? Because, we kind of are breaking out here, but this can still reverse, right? Volatility is still here in the markets, right? And if it goes against the bulls, right, you can't be surprised about that by any means. But as it stands right now, some positive developments for the bulls taking place. This price action is really just continuing to go sideways here, looking for a breakout, reclaim that 20-day moving average that's right there. Would be nice to see the ratio between Bitcoin and the SPX get back above that 50 EMA to present itself for a shorter term buy signal right there too as well. If we take a look at Ethereum is turning up right here, which is a positive sign. This is still holding as support, but we are below that 20 and 50-day moving average, so there's still work to be done. Okay, we're not out of the woods yet, but there are some positive developments. You cannot be surprised if these positive developments go against us quickly. Another thing to call out, we potentially are wedging here too as well, slightly there in the price of Ethereum. So yeah, we'll see what takes place there, everybody. That's all I got for you on today's episode. Hope that helped out, give you some insight on what to maybe look for going into tomorrow and or Friday. I may or may not have an episode come out tomorrow unless something crazy happens, but I will come out with that weekly recap. That's for sure. I will see you back here then. See you all later. Bye.